Hi there, traders. This is Brad Gilbert with the FX Market Insight for Thursday, the 30th of January. All right, now the Fed has come and gone. Now, no major surprises here. There was no expected change of rates. If anything, they did air concerns about global growth in relation to the Chinese coronavirus or the spread of. So that's where we are with the Fed, right? So they're talking about keeping rates steady, maybe pulling back some Treasury bill purchases later in the year. Tells me they're pretty much just going to keep interest rates on hold. So on hold, unless the data really starts cooking, which I can't see. It's a bit of a neutral to maybe a slightly dovish scenario, but no clear direction from the Fed at this point. Now, coming into the Trump's impeachment proceedings, it's like a long drawn out affair. They're trying to work out whether they can include witnesses or not. Imagine having doing a crime and having no witnesses. Everyone would get off, right? So anyway, that's a bit of a joke. And no major changes there. Then everything's around, around the virus. Sterling, well, hanging around. We've got the Bank of England coming up, but you know what? No major change of rates. And with all the central banks will be on hold with this whole global growth scenario around the coronavirus. So just bear that in mind. Now, looking for market direction here on the major currency pairs. Once again, the Aussie, well, still, to me, it's still got a downward movement, hourlies and dailies. Same with the Kiwi. Really, to me, dollar yen is now trading sideways as that risk on, risk off scenario sort of fades. Comes into a risk off, neutral, slight rally in equities, but nothing really going on. So dollar yen doesn't know what it's doing. To me, euro is still going down. Sterling overall sideways, even though short term it's gone down, and dollar CAD still heading to the top side, right? So if you're looking at the overall dollar scenario, the dollar index, okay, it's slowly but surely just moving to the top side. It doesn't look like it's going up because it's so gradual. But obviously, look at the impact of the coronavirus on the yuan with the dollar rallying significantly. This tells me that things are sort of settling down, okay, in relation to the coronavirus. The yuan is stabilized. So I have to keep an eye on this space as we go forward. Now, one of the easiest ways to work out what's going on as far as the risk on, risk off scenario is having a template such as this, as the risk on, risk off template. Now, what I'm doing is trying to isolate equity markets and their impact on the safe haven trade. So safe havens being, say, some of the metals and commodities and also the equity markets, all right? And when you're looking at equity markets, especially in Asia, it's obviously dollar yen is a big play, as is the dollar Swiss, but that also brings in the end crosses. Now, US equity markets, pretty neutral, right? Okay, so no major changes there. And that's probably going to be reflected across the board. But just focus on this. Let's look at the correlation matrix. If you're trying to work out what's impacting what, I've got the equity markets on the x-axis up here on the correlation matrix and all the currencies and some of the metals on the y-axis. Check out, this is the last week of trading, the correlations. Now, it's very rare that we see such a high correlation. Obviously, the yen crosses positively correlating with the equity markets, Aussie dollar in that basket as well. And then down the bottom here, obviously the some of the metals and actually CAD are correlating the other way, right? So you've got when you see these high correlations, it helps you focus on which pairs to trade. So if you are watching the equity markets, keep an eye on these specific pairs that are impacted. And it's going to make trading a little bit easier, and make sure you're trading the pairs that are actually moving. If you look at this, right, and I just changed colors here, look at Kiwi, Kiwi, Euro and Sterling. These things aren't moving with the equity market. So don't think they are. This is telling me they're not, right? So make sure you are focusing on that as you go through each trading session. Really, if any sort of fresh news about the coronavirus is probably going to come out in the Asian session. So, don't sit in front of your screens waiting for an article to come out. That's ludicrous. But if you happen to be in front of the screens and you do see an update, check the time of it. It may be instrumental in what you're going to be doing. Make sure you get the right trading pairs. If I just get come back to the MyFX Trading Hub, look at the where some of these oscillators are matching up with the direction, the overall direction of the currencies. You can start to piece together like dollar index. Yeah, it's a bit of a buy. at the moment. Dollar yen is not sort of matching up, nor is dollar Swiss, but dollar CAD is. And then if I just scroll down a touch to euro sterling and Aussie and Kiwi, you'll start to see here, well, the oscillators don't match up with the overall direction, nor sterling. The Aussie and Kiwi do. So probably the better pairs to focus on for there. Now, where's the activity going to be focusing around? Well, it's going to be focusing on the German employment numbers. Now, not a really high impacting number, but something that could really come into play. Obviously, the next central bank up, and the Fed has given us a bit of a lead in here. I'm expecting the Bank of England to come out and say exactly the same as the Fed, right? They've got things to do with economic numbers, and there's been some variance in the core fundamentals of the UK, but this coronavirus is going to overshadow everything. And I think that's what they're going to mention as we go forward. So keep an eye on the German employment numbers. It's a pretty resilient number. That's why if we do get some variance, it's very important because you rarely do. So don't expect it, but just keep an eye on it if you do happen to be in front of the screens. And that's pretty much all she wrote for today. Okay, the Fed come and gone, giving us the direction. So overall market conditions, for my liking, still pretty average. The geopolitics, which I would include the coronavirus, obviously, is dominating. And you look at the market drivers, these core drivers are still the geopolitical events are driving things. Don't forget Brexit. January 31st was the exit day for the UK. It'd be good to get that signed up. And then the Bank of England can get on with managing the UK economy. And the UK government can start sort of negotiating deals with whoever. Okay, I think it's going to be very positive for the UK. All right, guys, that's where we are at the moment. As I said, keep an eye on your technicals, but more importantly, keep an eye on the pairs that are making a lot of sense. And that's where your, say, correlation matrix can come into play. All right, guys, have a good one. Cheerio.